This earnings call audio is presented to you by Alpha Street. Do visit us at www.alphastreet.com/India.
Ladies and gentlemen, good day and welcome to the investor conference call of Sanofi India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Radhika Shah, Company Secretary of Sanofi India Limited. Thank you, and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to the investor call of Sanofi India Limited. My name is Radhika Shah, and I am the Company Secretary of Sanofi India Limited. I have with me Mr. Rajaram Narayanan, Managing Director, and Mr. Vaibhav Karandikar, Whole-Time Director and the Chief Financial Officer of Sanofi India Limited.
Good afternoon, everyone.
Good afternoon, everyone.
Before we begin this investor call, there are two important announcements. First, please note that the proceedings of this meeting, as mentioned before, are being recorded. And second, please also note our standard disclaimer that certain statements in this call may be forward-looking. The actual results may be affected by many factors that may be different from what is being envisaged in terms of future performance and outlook that is being discussed today. Moving on to agenda of this call, we have divided this call into two parts. In the first part, management will make certain opening remarks regarding the financial performance of the company. And in the second part, management will take questions from investors and participants on the call. The Q&A session will end by 3 p.m. All investors and participants are requested to keep their questions brief and avoid repetition. I now hand over the call to Mr. Narayanan and Mr. Karandikar to give their opening remarks.
Thank you, Radhika, and thank you, ladies and gentlemen, for joining this call. I am Rajaram Narayanan, and I'm joined by my colleague Vaibhav. I hope that all of you are safe and keeping fine, and even though the situation seems to be getting better on the COVID front, I think we must emphasize that we should not let down guard at all stages. And there seems to be some semblance of normalcy, but I think, the infection is still around, and therefore, just like we are emphasizing in the company, we continue to give the message of being very careful. At Sanofi, 2022 has been a challenging but a very fulfilling year, like it has been for many parts of the industry. The first half was quite sort of dominated by the wave of infection. And we as a company continue to focus on what we call the 4S, which is safety, supply, service, and skill building. We had our employees fully vaccinated, and more than 95% of them were fully vaccinated in the third quarter itself. And we are also happy to say that we had no disruptions in supply during 2021. Even though it was a very, very difficult year, and our manufacturing locations as well as our supply chain really delivered excellently. We continue to build new capabilities, particularly in our go-to-market models, emphasizing digital and omnichannel engagement. As far as key events which impacted the business, the first highlight, of course, was that we launched our insulin glargine 300, which is 2GO in cartridges, which is the first in the world for 2GO in a reusable pen format. And we've been seeing excellent momentum for this in line with our diabetes prioritization. We continue to remain very excited about the opportunity to develop and shape the diabetes market in India. At the same time, we also divested our nutraceutical businesses in line with our strategic priorities, and we successfully completed the transaction. I just want to highlight that, we did a national launch of a big portfolio like 2GO, and we also divested nutraceuticals in these COVID times, and both of them were done entirely digitally, signaling the shape of things to come in the market in the future. Our biggest effort now is, of course, on leveraging our digital and go-to-market models so that we can improve access for our brands, reach more customers, and raise the quality of our engagement. And we have therefore invested significantly in our CRM systems, our analytics, the devices that we have, And at the same time, the entire organization is also being upskilled along with the compulsory digital curriculums and training programs. Because we believe that the future is going to be a hybrid one, and we need to create that advantage for the organization in such an environment. On a broader view on the pharma market, I think the last 2 years have seen its ups and downs. There have been some quarters which have been very good, and some quarters have been low, and a lot of it has been driven by whether COVID-specific therapies, found momentum in that quarter and whether specific launches were done. On the same note, even in our business over the last year, there have been some quarters where we have seen an acceleration of certain therapies, and some quarters where we have seen a leveling of that on account of the easing of COVID-19 cases. We believe that 2022 will be far more stable, although the growth will be impacted depending on what the effect of the base year is in terms of which quarter went up or which quarter went down. So on that note, I'm going to hand over the call to our CFO, Vaibhav, to take you through a little bit more of the specifics of 2021. Over to you, Vaibhav.
Thank you, Raja. Good afternoon, everyone again. Just to give a high-level comments on the financial results before we come to the Q&A. So 2021 has been a good year for Sanofi. Optically, of course, you might see that the sales have grown by only 2%. But it should be noted that this 2% growth is after taking into consideration the drop of almost 200 crores plus in export sales due to the slump sale transaction with Zentiva. Essentially, the drop in export sales has been contributed or has been compensated for by the growth in the domestic business of the company. And the growth is at around 12%. It's 13% on a comparable basis. And this contributes to almost 260 crores plus versus the previous year in the domestic business. Your company, as we all know, focuses on certain key therapeutic areas, and we are the trusted partners for healthcare professionals, hospitals, government institutions, patients, and all regulators in the therapeutic areas that we focus on. In terms of the profitability, the profit before exceptional items has increased by 7%, and it stands at 768 crores. And this is despite the pressure on margins due to the significant rise in price of certain APIs, namely paracetamol. As was mentioned by Raja, the sale of the nutraceutical business has resulted in a profit of 489 crores. The profit after tax, the growth of 98% is due to the strong growth in the operating profit, which I commented upon, and also the profit from the sale of the nutraceutical business. The company has declared a total dividend of 490 per share, including a special dividend of 309 per share. And the approximate payout will be in the range of 1,129 crores. In the last year's investor call, I think if all of you recollect, we had highlighted 3 business priorities. And we continue to work on these 3 business priorities. As a reminder, the 3 business priorities are accelerate growth in diabetes, selective and profitable growth in the established products, and build certain key brands in the consumer healthcare portfolio. Before we open the floor for questions, I would like to address a concern raised by some of the investors, especially considering that our key priority remains accelerate growth in diabetes. And the concern raised was on the impact of price control of Lantus, which is likely. Just as a clarification, and we can of course answer more questions on this, but it's important to note that while the price control impact, the impact on the top line is likely to be significant, the impact on the bottom line is likely to be limited because we operate on an arm's length operating model. And therefore, the impact is going to be restricted to the margin loss on the sales loss. I hope I'm clear, but as we go along, I'll be happy to answer the questions if this clarification is not sufficient. I leave the floor now to Radhika to take it forward.
Thank you, Mr. Narayanan and Mr. Karandikar, for your comments and remarks. We will now proceed to an interactive Q&A session. In this session, we will respond to your queries within the boundaries of our internal policies. As per our policies, we will restrict our responses to clarify on matters which are already available in public domain. through our annual reports, quarterly financial statements, and other disclosures made to stock exchanges. There are many granular aspects of our business or financials, such as product-wise or site-wise or therapy-wise sales, margins, and profitability, which we consider confidential, and hence we will not be able to comment on those topics. Also, we do not provide any earnings guidance, and hence we will not be able to respond to the queries on future business, future product launches, margins, or profitability or CapEx. You may please raise your queries accordingly. We had mentioned on the registration link, we will be taking questions from you in sequence of your registration. Thank you for registrations that have come in. In case of multiple registrations from the same participant, we will take the questions from the first registered participant and give others the opportunity at the end of the session. In the interest of time and for giving equal opportunity to all other participants, please keep the number of questions limited to 1 or 2. I now hand over the conference to the Chorus Call team. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The first question is from the line of Vipul Shah from Ripple Wave Equity. Please go ahead.
Hi, thank you for taking my question. Just wanted to understand in terms of the quarter gone by. So there are two questions. A, is the NLEM price impact already in this quarter for Lantus? That was question 1. And second, we've seen the other expenses to sales at a pretty elevated level in this quarter. Historically, they've been, in the range of 13 to 15%, whereas this quarter, the other expenses to sales were around 21%. So is there any one-off in this, and should we, what should the normal, other expenses to the sales number be, going ahead? That is question number 2. Thank you.
Thank you, Vipul. So I'll answer the first one. The NLEM, list, first of all, has not been formally released. Yeah. So even as regard to Lantus, there are reports which have come, and I think Vaibhav was only asking for, I was replying to certain clarifications which have come. But to be very clear over here, there is no list which is being released by the government formally on the National List of Essential Medicines. It is generally expected sometime, in the first half of this year, and we are all awaiting. There is a likelihood, at least as per the reports in the newspapers, that Lantus could be included, and it's in that context that we have, given some clarification. But the first quarter results do not have any component of any new NLEM, which is there. Okay, and Vaibhav, the second one, maybe you can answer these.
Yeah. So to add to what Raja said, as Raja mentioned, the clarification on Lantus is more in response to some of the queries raised, especially considering that diabetes is an important area for us to focus on. Coming back to your question on the expenses and the Q4 2021 expenses as a percentage to sales, the other expenses being higher. So there are a couple of reasons for it. One reason is, of course, in Q4 2021, we were back in terms of back to the field in terms of physical operations. And while that is one reason, there were also some, product cycle meetings, etc., more from operational strategy implementation for 2022, etc. But it's largely driven by the fact that it was back to work. There is an element of CSR spend, the mandatory CSR spend, which came more in Q4 of 2021 in terms of phasing, which also is contributing. And another reason for the higher impact, as you can see, is also because of the sales being lower in this quarter compared to the immediately preceding quarter. So the expenses in absolute terms being higher and the sales being lower, overall optically the percentage looks high. It's not expected that the same level of percentage will be, as a percentage to sales, will be seen going forward. So there'll be an overall normalization. But as we commence the physical activities again, there is likely to be some amount of increase over the overall average in other expenses to sales ratio. If you look at Jan-December 2021, the average comes to roughly 16%. So one can expect a slight increase over this percentage, though clearly not the same percentage that you see in Q4 of 2021.
So related to that, as you mentioned that, and if you see Q on Q, the sales drop is there to the extent of almost 8%. So is there some seasonality built in it, or is this also the impact of the nutraceutical sort of top line going out from September?
Yeah, so like you pointed out, there is clearly the impact of the nutraceutical business, which is there in Q4. And there is also it's not a seasonality part, but in Q2 and Q3, certain products we had higher sales because of the COVID impact. Products like Clexane and insulins, we saw higher traction. So I would not contribute it to seasonality, but for sure, peculiarly in Q2 and Q3, we had higher sales on this account. And both the factors, therefore, you see that there is a degrowth in the domestic segment because of these two reasons.
And lastly, probably a request to the management that, if this interaction could be at a more frequent level, it would really help the shareholders. And also, if the company, can give some investor deck, if you see the parent, it's a fantastic investor deck which the parent lays out. So something of that could be adopted here, given the fact that you have a 40% minority shareholder, and we're really glued on to the company, what it does, and any sort of color, as Sanofi gives out in France, similar lines, it would be really helpful. That's a request. Thank you for that.
Thank you, Vipul. We've noted your request. Thank you.
Thank you. The next question is from the line of Suchi Narula, an individual investor. Please go ahead. Suchi Narula, your line is in talk mode. Please go ahead with your question. As there is no response from the current participant, we move to the next question from the line of Cinderella Thomas Carvalho from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. If you can help me understand the diabetes portfolio volume growth on an annual basis, and in case of any threat in terms of NLEM come through, would it be on the smallest unit of 3 ml vial, and would Toujeo be part of it or excluded? Clarifications on these fronts.
So firstly thank you for the question. Firstly, on the second piece of it, really we cannot speculate at all on what will come in the NLEM, and this, in our view, we should just leave it to whatever the judgment of the government is going to be on that. And in any case, I think we have a very comprehensive portfolio, and there is a huge opportunity to grow the insulin business, in India. As I said before, the penetration levels of insulin in India are just 16%, and that's significantly lower than most other countries. And with a comprehensive portfolio like ours, we really look at market development, and that should be something that gives us a big headroom for the future. But there is nothing that we can comment on which product, etc., because there is no list published. On the first part of it, in terms of the
volume growth of insulin.
The overall volume growth of insulin is at about a little over 5% in terms of the total volume. It's of course much higher now, driven because of the launch of Toujeo, and we expect that the momentum in Toujeo will continue. Thank you.
And just to clarify from our strategy perspective, any other established and the consumer brands which you were highlighting, any success that we have gained over this last 1 year in this transition of nutraceutical going out and export focus lowering down? So if you could highlight any success that we have had in terms of strategy to focus on these two segments, and if you can help us with some more granularities around it.
Very clearly, I think the emphasis on allergy continues from our side, and Allegra continues to remain an important. It's a brand which is growing for us. We've also an innovation pipeline on it. We have recently launched the nasal duo spray. On Allegra, we have started expanding our reach in Allegra through new programs, both in field as well as through digital engagement. And that brand is building very fast. We've seen a strong revival also happening in Concall tablets, and we are seeing acceleration as the markets have opened up again. So the innovation pipeline continues for key brands of ours, which are market leaders. As I don't think it's one to compensate the other, because the nutraceuticals divestment was purely strategic. It didn't fit in with our priorities. But the other brands like Allegra and Concall are high priority for us. Yeah.
Thank you so
our
much.
ambition in general, like we've always said, that in these key brands that we have, we want to grow faster than the market.
Thank you so much. Very helpful.
Thank you. The next question is from the line of Suchi Narula, an individual investor. Please go ahead.
Yeah. Hello. Am I audible?
Yes, sir. Please proceed.
Yeah. So thanks for taking my questions. The first question is, can you give the contribution of COVID-related sales in CY21?
So, look, okay, what's your second question?
Yeah, I
together instead of going one at a time, yeah.
Okay, so contribution of COVID, what's the current contribution of products under NLEM is the other one, and I also wanted to understand, the impact that going digital in a big way can have on your PCPM, OPEX and CAPEX, and also the contribution of soframycin, which will go off.
So we'll take one at a time. The first one, we don't have any COVID contributing therapies per se, like medicines which are specifically dedicated to COVID, like what have been launched in the recent times. We don't do that. There are a couple of therapies which tend to accelerate due to things like hospitalization, for example. As the hospitalization cases increase, the need for enoxaparin, which is our brand Flexin, increased because of large number of cases which were hospitalized. And then, of course, as the cases came down, the requirement came down. But it's not a COVID-specific therapy. It continues to sell throughout the year and just gets a bit of a spike when hospitalizations increase.
I understand that. Sorry, if I may just sort of ask for a clarification there. You probably have an understanding of the trend line sales of Flexin, and obviously, you can therefore impute out at least on a ballpark basis, what's been the impact?
Basis, we could say we would have had about between 12 and 15% kind of an increase on an annualized basis on Klexane. Yeah, against typically what would have been a regular year. Of course, the spike would have been much higher in the few months when COVID was high.
Right.
Yeah.
Yes.
And that's the only real therapy which is got. The others are pretty much, stable kind of businesses.
The second question I think you had
on
the
NLEM contribution is about 18%. 18% of our portfolio comes under NLEM at this point of time. Yeah? So that's the second question you had.
And I couldn't understand the comments Vaibhav made on impact of NLEM on Lantus. If you could just clarify what you mean by the impact of on top line not sort of coming down to the EBITDA line, or is it going to come to the EBITDA line in a commensurate way to the top line?
I think on this, it is just speculation right now on whether Lantus will come under price control or not. It is just that there are a couple of articles which came out, including insulin glargine, and consequently some of the shareholders have asked, and I think creatively that has been clarified. It will obviously, if it comes under price control, there will be a hit in the top line. It will come down proportionately.
The top line will come down, but it will not. The entire value will not flow to the EBITDA. I think that's the question, and that's the clarification which I made. Yeah. Since we operate on a arm's length methodology here, the entire drop in sales value will not flow to EBITDA. That's the point which I was trying to clarify. Again, as Raja pointed out, this is more to clarify some of the concerns of the shareholders. We have received some questions in writing, so we wanted to preempt that by answering the question upfront. I hope that clarifies.
Yeah, to a certain extent, yes. Thanks.
Okay, then the other last question you had, I think that's it, right?
No, I had one more question, and that is related to the impact on PCPM that your digital efforts could have, and also, what could be the OPEX or CAPEX related to, investing in CRM and expanding your digital footprint.
Okay, so sorry, just give me I can say, you want to know OPEX and CAPEX. So there is no real impact on our CAPEX on account of this in terms of the digital footprint. As far as OPEX is concerned, we are seeing, of course, some reduction because the face-to-face interactions have come down.
Yeah, and like Raja said, there'll be some reduction in OPEX, but we are also looking at increasing the reach based on using the digital medium. So depending on the total, points that we have today, using digital means will also help us to enhance the reach. And OPEX, of course, there'll be some reduction, but I think for us, the way we look at it is increasing the reach is more important using these new channels.
Right. And did Soframycin impact Q4?
No impact on Soframycin on Q4. The transaction was closed in January of 2022.
Right. Thanks. I'll get back in the queue.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Good afternoon. My one question was on the insulin part only. So, what we have been saying, does it mean that we get only marketing and distribution margin as a percentage of revenue, and hence we expect lesser impact in margins? That is what you are trying to say?
No, we get traded margins on the portfolio, but these traded margins are capped at an arm's length basis. And therefore, in case we are less than arm's length, we expect the compensation to come from the group. And therefore, as I said, the flow through will not be to EBITDA completely, although the overall value may deplete.
Okay. Thanks for the detailed reply. And one thing, what is the size of the domestic business X of divestments what we have done in 2021, and what was the growth in the remaining business which has not been divested?
So if you look at the question is more for the retained business which has not been divested, the overall increase is roughly in the range of 13%.
So this 13% is X of non-divested business. And the size of that non-divested business is?
It's close to 2,240 crores.
Okay. Okay. And one more thing.
Yeah.
We have not brought many new product introductions in oral dosages in diabetes and cardiovascular. Okay. What will be the impact on us, and what is the strategy for us? Means, especially when diabetes is a core therapy for us. So how do you play the market where many more oral dosages or many more products are coming in the oral dosages, and we are having reduced market share? And secondly, is cardio core business for us now because of we have not introduced many products? So just some thoughts on there will be helpful.
Thank you. So the first part of it is, as far as diabetes is concerned, as a innovator company, for us the focus is entirely on insulin, right? At this point of time, because some companies are focused on insulin, some are focused on introducing new oral diabetes molecules, and our effort has largely been in the area of insulin. And that's where we are looking at a pipeline to build. And as we said earlier, it is a heavily underpenetrated part of the market, and there should be a significant headroom, not just in terms of new products, but also in terms of surely increasing the capability and capacity for physicians to be able to prescribe insulin. Having said that, we are completely open to being aligned and get partnerships with other companies or anywhere, even in oral diabetes or cardiology, where we can add or leverage the strength of our team as well as our current equity, which we have with physicians in the market. So that we keep exploring, and that is still an open, but we don't have a pipeline very specifically for oral diabetes right now. As far as cardiology is concerned, yes, there are some products which are launched already in other parts of the world. We are looking at them if there's an opportunity to bring them.
Okay, and one last thing. What would be like-to-like growth of the market where we are present versus 13% for us?
Broadly, we would be in line with the market. If you remove the COVID specific entries and exits, we would broadly in the areas where we are, we would be in line with the market. Yeah.
Okay. Okay. I'll join back in the queue. Yeah. Thank you.
Thanks.
Thank you. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah. Hi. Good afternoon. Am I audible?
Yes.
Yes.
Yeah. Just continuing on previous participant question. Now, sir, we've stated that our focus is to grow the insulin part of the business and the under penetration. But if we look at most of the domestic companies, like the tie-ups which Lupin has done with Eli Lilly or other guys are doing, in terms of they have a good pipeline of oral products, and then they are introducing the insulins. Doesn't it create for them the ability to graduate the patient from oral dosage to insulin, and the doctor staying in the same realm rather than for Sanofi? Does it create kind of a handicap because we don't our oral dosage kind of products other than Amaryl are not many, though we have one or two in the Sanofi Synthelabo, but does it create kind of a handicap to gain the market share even in insulin over a longer term?
No, I think, we've been in the continuum even before, right? Even when a lot of new oral products are not there. Generally, we find that there is no, doctors do not, or physicians do not look at a company continuum of products while they prescribe to patients. I think there is a very specific medical need when they prescribe insulin, and basal insulin, which is the gold standard of prescription, is something that we have introduced in the market almost 15 years ago. So there is no real reason to look at any big advantage which you get from a continuum of treatment for products being within the same organization or company. On the second piece of it, I think different companies, building insulins is not just about, making it available and detailing. There's a significant amount of work required around the product. For example, we have a patient support program where we provide, guidance and support to over 100,000 patients every year. We are one of the few companies which has a reusable pen which we provide to patients so that they are able to get initiated early. Insulin is a much more sophisticated treatment which requires a lot of support both from the physicians as well as the rest of the ecosystem. So it's not just a normal sort of transition from a tablet to an injection.
Okay. Second question, sir, if you look at parent and 1.5 years back in the analyst day, we had Sanofi Global had mentioned that they wouldn't be looking at CVS and diabetes because we don't have a breakthrough products in there, and the focus was more on specialties and rare medical disorder kind of products where our R&D pipeline was pretty strong. Now, if I look at from Sanofi India perspective, is there a change in terms of the parent's focus of rather than only looking at the pipeline, we get more independence in terms of launching more therapy oriented, but more independence in terms of products rather than looking at only what the parent has in terms of pipeline, or our product selection would be limited to what the parent has?
A good question. I think the first part of it is that we have globally said that we will not focus on the research part of insulin and diabetes and cardiovascular. We have not said that we are not open to partnerships or accessing any new products from others. And in fact, we have even recently been in that journey and looking at closing those kind of partnerships. So it's just that we felt that by investing in basic research, we would not be creating any better value for patients than what is already there in the market. However, on the development side and in partnerships and introduction, we've been doing that in different markets, and India is no different. We will be completely open to receiving any products which fit our portfolio, and some of these could be sourced by the group itself, and some could come from outside. As far as the freedom, as you are saying, to launch anything in India, we obviously prefer products which are within the group because it gives us many more advantages in terms of sourcing, in terms of medical support, in terms of further sort of pipeline on the product. But should it be fitting our therapy areas, we would consider any kind of introduction. But
for example, in Toujeo, it's not a new development, but it's a first in the world kind of.
For example, Toujeo is like Bible says, a very good example. We do not have a reusable cartridge anywhere in the world on Toujeo, specifically developed for India by our teams here in collaboration with our global team. It's manufactured in a plant in India. So to that extent, we have enough sort of opportunity to build, but in the areas which we have identified.
Sure, I'll come back to the queue.
Thank you.
Thank you. The next question is from the line of Samir Deshpande from Fairdeal Investments. Please go ahead.
Hello, good afternoon, sir. I would like to know that regarding Lantus, we heard from you regarding the drug policy which is yet to come there, and actually if it is not yet effective. But now another product was launched by Biocon, which is Semglee, which is the first biosimilar. And I think from August onwards, they have launched it abroad, not in India yet. So then the price which they mention is around 65% lower than Lantus. So would that affect if it is sold in India?
Thanks. So first, let me re-clarify once more. The Lantus, government pricing, etc., purely something which has been triggered in a couple of media things, but there is no official list on that. So I think we should keep that out of the discussion. As far as the biosimilar is concerned, yes, but biosimilars have been there in India now for over 7-8 years at a lower price than Lantus. And they're not exactly biosimilars, but some of them have been there. And as I said before, to develop the market, it is not just about making a medicine available. It's a significant amount of investment around education, as well as training and making patients comfortable with it. So that is a big capability which we have built over the last 15 years. And that is why even though you have, similar products in India, they have not been at a lower price. In fact, they have not made much of a headway. Having said that, the specific case of what you mentioned, which has been launched, that's a pricing with respect to the pricing overseas. We have no idea about what the pricing in India will be, but I don't think it is something that at this point of time we would be too concerned about, for the simple reason that developing the insulin regime and treatment amongst patients is not just a question of it being cheap. Price is not the biggest barrier for the adoption of insulin in India. It is about treatment, education, etc.
Achha, so then the quality of the product of Lantus has been proved over last so many years. So whether the biosimilar will be in a position to give the same results is also questionable.
I cannot comment at all on that. It's purely this thing. All that we can be very sure is about our product.
And now this regarding this volumes, you mentioned the volume growth for insulin during the current year was about 5%.
That's right.
For our products particularly. And the Tujo product which has been launched, what was the contribution during the current year sales?
I think, Tujo, this is probably not the best year because anything that we tell you will run, in very high, percentages because it's been launched for half the year and it's been launched as a new product. All that I can say is that next year perhaps is a better idea of looking at what the ratios of these are. Yeah. But we are very happy with the performance of Tujo right now.
And last question is regarding the sales growth. You mentioned that excluding the products which were sold under Zentiva, generic products and nutraceuticals, the sales for the current year, 2021, are around 13% higher than the last year for comparable.
That's right. On a pure retained business basis, it's a 13% growth compared to the previous year.
Okay. So now current year again we have sold the soframycin in the current year 2022. So that I think is expected to reduce the sales by around 75 odd crores further.
Yes, around that value. Of course, it varies year on year, but it's closer to that number. Yes.
Around 70-75 crores. And this nutraceuticals, what was the sales contribution in the current year for nutraceuticals in 2021?
The total contribution for Nutra in the current year is in the range of 5%.
5% of 2,900 odd crores. That is 140-50 crores.
5% is on the domestic business sales. I don't usually give you, even the earlier explanation on 13% growth is on the domestic business. So 5% is domestic business contribution. If you look at including export, it will be much less. Clear?
Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Thanks for the opportunity. I have a question with respect to your established product portfolio. So you are seeking profitable growth in that segment. Can you share what percentage of your business would you qualify as established product, domestic business?
Yeah. Just give us a second.
Around 50% of our current business would be the established products.
And this is 50% of the domestic sales.
Domestic, yeah, we only discussed it.
And from a top line perspective, how would this be growing in terms of value? Could this be mid-single digit sort of growth in the established product?
More like single digits, mid single digits to maybe somewhere in say 7 to 8% kind of growth is what we establish. Of course, within that, you will have parts which we focus on which will grow well above in double digits, depending on the brand it is and the prioritization that we have.
Right. So for the rest, so for you to clock double-digit growth, the rest of the portfolio has to be between 10 to 15%.
Yeah, I guess you could deduce that yourself on that math, but generally we are operating in certain areas which are high growth, and we would like to beat the market on that.
Okay. And on the insulin front, so would you be launching a premix insulin, because that's where you don't have a product category, and India is quite large on the premix front?
I can't comment anything on our launch plans right now. We have enough market development which we are doing right now, but obviously, we are thinking of all the options to keep growing the market.
Okay. And just one more on Combiflam. So you had introduced the topical version of Combiflam, gel and spray. Any color on how that is performing?
So we've not delivered as much as we thought we would on that, and we are therefore, relooking at the mix. It has had very good success in the bigger cities and in certain pockets of the country, but I think we would be looking at it, more in terms of the total portfolio and relooking at the brand again for launch.
Okay. Thank you. That is all from my side.
Thank you so much.
Thank you.
Thank you. The next question is from the line of Harshal Patil from Sharekhan. Please go ahead.
Thank you, sir, for the opportunity. So most of my questions are answered. I have just a few bookkeeping questions to ask. So we're saying that we'll be focused more on our diabetes portfolio for growth ahead, and for cardio, we are kind of, looking at getting some brands from other markets to India. So, sir, I just wanted to know what would be the combined contribution of diabetes and cardio in our total revenues right now?
So we don't look at it separately. So our only thing is we look at diabetes, insulin and diabetes, which I told you is roughly closer to about 30% of our portfolio. Yeah. More specifically, cardio is an interlinked therapy.
Right. So 30% would be diabetes, so to say, so the insulin products, so to say.
Yeah, that's right.
Okay. And got that, sir. And lastly, sir, also just wanted to have what would be your share of exports in total revenues for CY21?
This current year is 13%.
Okay, so that's CY21. Okay.
Thank you.
Thank you. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Cinderella Thomas Carvalho from Centrum Broking. Please go ahead.
Thank you so much. So on the transaction that we have entered with our merged subsidiary entity now, and we had highlighted that we are restricting it to almost 1,000 crore per annum kind of a limit from the current exposure of 380 odd crores. So can you please explain this transaction? I understand that you had highlighted that there are purchase agreements in terms of Lantus and...
Just repeat your question. Sorry, we just couldn't hear you clearly. If you can slowly repeat the question.
Am I audible? Is this clear now?
Yes.
Yeah, so I am asking in terms of our agreement with our merged subsidiary entity here in India, where we have entered a transaction wherein we can have a purchase agreement almost up to 1,000 crores limit per annum.
That's right.
Yeah, so there I'm just trying to understand that we purchase generally our larger brands from this entity. So what kind of transaction are we looking ahead? And we had mentioned a comment also saying that we are looking at a very high growth in these particular brands that we transact in with our subsidiary. Can you highlight on these and explain a little bit more on these transactions?
Yes, so I think you're referring to the postal ballot. Basically, the approval that has been sought is for 1,000 crores over the next 5 years. So right now, what we are purchasing from the related party, which is Sanofi Healthcare India Private Limited, is Lantus and Toujeo. And like explained by myself and Raja, both of these are high growth areas for us. And essentially what we are, the purchase agreements relate to the purchase of Lantus and Toujeo from this entity, which is then made available to Sanofi India Limited for selling in the domestic market. The transactions, the limit of 1,000 crores is more on considering the growth over the next 5 years. And therefore, we have sought an approval for 1,000 crores.
So it's the kind of growth opportunity that we are seeing, wherein existingly we are doing almost 380 odd crores, right?
So yes, the current business is in that direction, and as you go along, the procurement will increase as both of Raja and myself are explaining. Even if you take basic market growth for insulins, we will be in that range as we move ahead. So therefore, the approval is sought for considering the basic market growth in this segment.
Okay, and now just coming back to our business, and if there is any kind of risk which comes to the insulin range, what is our risk mitigation strategy there? And what kind of sustainable volume growth that we can expect in worst scenario wherein we know we'll have some price impact on the top line? So if you can help us understand this.
So like I explained earlier, on the risk mitigation side, the price drop will have a limited impact. I'm not saying it will be not there. There will be a limited impact on the bottom line. The flow through will not be as much as in the profits as much as in sales. In terms of volumes, of course, if there is a drop in price, in fact, the traction in volumes is expected to be better as because our product, which is as we say, it's a better quality product, and therefore we are expected to see more volume traction as we go along. But I would probably even ask Raja to comment on the volume part of it.
So look, the fact that products will come under price control is a reality. We've had this even 5 years ago, and we continue to sort of grow some of those brands. As far as insulin is concerned, we believe that while price is not really the biggest barrier for growth at this point of time, should there be a reduction in headline prices of insulin, we will have a larger opportunity to go even further down and penetrate even smaller cities or make it accessible, because there is a large market for lower priced insulins anyway in the country right now, and therefore we believe that there will be an opportunity to grow volumes in that. So I think it is something that the company is prepared for. We have we are in readiness should such a situation arise.
So one can consider a double-digit volume growth possible. Is that a fair estimate?
I can't sort of give a comment on specifically on that, but I think historically you have seen that we've always been growing a reasonable sort of amount of volume in the line with the market.
Would it be possible to share the exact domestic sales number and the export sales number for CY21?
Yeah, so the domestic sales is in the range of 2,400 crores and the export sales is around 350 crores.
Okay, thank you so much.
One more question.
Thank you.
Yeah.
The next question is from the line of Suchi Narula, from an individual investor. Please go ahead.
Yeah, thanks for the follow-up. I just wanted to understand the margin profile on Lantus compared to your other brands, because the salience of Lantus will keep on increasing as it has a higher growth profile, and therefore on a blended basis, what does it sort of portend for our blended EBITDA margins?
So, like we mentioned at the beginning, we don't comment on specific product margins.
But here you are distributing and detailing on the product, whereas on some of the other products you are manufacturing. Would it be a reasonable inference that margins on Lantus could be on a percentage basis lower than the other products?
That's right. On an overall basis, if you look at the blended percentage today, the Lantus or the insulin margins would be lower than the overall.
And therefore, continuing on that, would it be reasonable to assume that going ahead, the margin profile will be under pressure, or you have some cost levers to offset, the arithmetic average of Lantus growing faster than the other brands?
So, if you look at it, there are three priorities. One is accelerate diabetes, selective and profitable growth in the cardio-diabetes segment, and higher growth in CHC. So, if you look at it on an overall weighted average basis, we don't see any reason why overall it should be significantly lower than what you see today.
I think even otherwise, I think it's not a deduction that you can possibly make, because there are consistently different elements which come with volume. Yeah.
And,
Go on.
Yeah. So, pardon my ignorance here.
Just to kind of add, over the last couple of years, if you look at historical performance, and again, this does not mean that you can infer the same for the future, but despite of Lantus and insulins growing by, let's say, 15-20% year on year, our operating profit as a percentage to sales has actually grown, if not remained the same. Again, just clarify that it does not mean that it's a guarantee of the same thing in the future, but you can probably see that it's a combination of multiple factors which gives us your margins.
Right. So I mean, if I look at the profile of margins over the last 2 years, your exports as a proportion have gone down, which has had a favorable impact on margins. Your sales force has sat home for some time, which at least during that time has had some impact, which is favorable on your margins. You've sold off nutraceuticals, that's impacting your margins. And therefore, I'm simply trying to understand, would margins that we've seen in the last 2 quarters, specifically would other expenses that we've seen in the last 2 quarters added together be a reasonable representation of your other expenses or margins going ahead?
No, as I said at the beginning for one of the questions, that if you have to look at operating expenses as a percentage to sales, please look at full year numbers. The last quarter numbers are not necessarily representative. And to answer your question on the other part, on operating profit as a percentage of sales, even in the earlier years, when you look at the evolution from 2017, which was without all these other factors, you have seen a growth excluding exceptional items as well. So broadly, as I said, the margin profile largely remains the same, despite the mix that you see in different segments.
But the full year of CY21 would have had non-recurring impacts of COVID as well. But you think other expenses for the full year CY21 are still representative as a percentage of sales going ahead?
I would say there will be some likely increase, but I would say they are largely representative, because you can see the 2021 numbers are also dependent on the ratios, are dependent on the sales value. So that also has an impact. But as we also mentioned at the beginning, we are not necessarily looking at OPEX reduction based on the hybrid models. We are also looking at increasing reach and therefore having an impact on volumes. So I would not like to specifically comment on the expense profile of 2022, but you can infer based on these comments on what's it likely to be going forward.
I understand. Again, pardon my ignorance here, but would it, I mean, again, a conjecture, is Toujeo going to cannibalize sales on Lantus? I'm just asking. I don't understand this very well.
Well, it's not designed to cannibalize on Lantus, because there are different patient segments for which Toujeo and Lantus are, meant for. Of course, there will be some overlap, which is there, but our at least 1 year or 1.5 years of experience with Toujeo indicates that a large portion of it has come from new patients and not come from cannibalization.
could you elaborate a little more on the addressable market? How is it different, and what's the addressable market size for Toujeo and growth profile for that?
Anybody who today is unable to achieve optimum control on diabetes with the standard of care, which is a protocol of treatment, typically initially starting with oral medication and it does not work, is at the addressable market for insulin. And that's a very, very large market. Within that, there are different alternatives available, and I think Toujeo has got a very, very large market, just as much as Lantus has in that.
Right. And Biocon's glargine was given interchangeable status, and the reference drug was, I think, your product. Obviously, they will use that as some sort of marketing strength or incentive too. And do you therefore see the competition from them and some of the other companies intensifying in the domestic market?
We're really glad that there is more effort being put in the share of voice that insulin is getting overall in the market. I think if there are a few more, if the players are going to increase the effort on promoting insulin for the right kind of patients, I think it will just expand the insulin market, which today in India is significantly underpenetrated compared to the rest of the world. So I think if there are more authentic conversations on insulin, I think it will just be good for the overall market. As far as interchangeability is concerned, that's of course, as you stated, it's not in India. But having said that, I think we're more interested in growing the market, and that's really the bigger opportunity rather than market share.
Right. And finally, with your permission, just one more question. And I mean, in your previous interaction, you indicated that your attempt will be to, or rather that given the aging profile of your brands, that it will be difficult for you to grow in excess of the covered market on an overall aggregate basis in the domestic market. Is that something that you maintain, or do you feel that with your efforts on digital, with focus on growing volumes and so on, there's some change on thoughts there?
I think what we said is that our focus is not to try and exceed the aggregate market, right? Our focus is to grow in the addressed market. It's not that we are not keeping an eye on the overall market, but in some years we have grown faster than the overall market because the portfolios where we are present have grown significantly, and that market segment has grown significantly. The last couple of years has been, I would say, there are a lot of aberrations due to COVID. Now, as the market stabilizes in 22, our expectation is that the therapies where we are focusing should drive a large part of the market growth. And that therefore should help us in the overall aggregate growth as well.
Right. Thanks, sir, and all the best to you. Thank you.
Thank you very much.
Thank you. Ladies and gentlemen, in the interest of time, we take one last question from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, my question was, how much would be the increase in physicians who are prescribing our insulins in last 3 years, and how this is in reference to your approach to grow the market, okay? And how many physicians will be prescribing our products currently? Secondly, what is in this thing, what is the opportunity size, or what percentage of doctors are prescribing our insulins, and how is the penetration for us in tier 2 and 3? And how would it have improved in last 3 years of effort? And entering or more penetration in tier 2, tier 3 cities, would that be the thing what you are trying to emphasize when you are saying that you want to grow the market, especially for insulins?
So look, in we today reach over 100,000 physicians as a company, yeah, through various of our teams at this point of time. And different specialties prescribe, different medicines and different therapies. So I think, exactly to say who prescribes what, while we have an idea of it, we normally would not want to share that kind of information. But having said that, I think you could take, in terms of indices, I can probably give you a sense that if we have about 100, physicians who might be prescribing diabetes-related medication, at any point of time, you might have closer to about 30 to 40% of them who may be, more sort of comfortable with prescribing insulin, and so there is one big headroom over there. Second, we as a company cover nearly 75 to 80% of the universe of all physicians who cover that, who prescribe some diabetes medication. So there is a headroom over there. Much of this headroom is there in smaller cities, and therefore, obviously, that's where we are going to see more growth coming at this point of time.
What special efforts are you taking to grow in tier 2, tier 3 cities? Can you say where the scope is bigger and how are you trying?
So several initiatives. Of course, we are physically reaching more number of doctors through over the period of last 3 to 4 years, we have actually increased our coverage, physical coverage of these doctors. We also now have hybrid coverage through digital mediums and through programs which we have either through omnichannel, through digital detailing, through virtual conferences. All of those are efforts that we have in place, which we are engaging physicians with. We also have the advantage of multiple therapies which go to these physicians. So we use that opportunity also to reach out to them. But primary focus is on educating more number of physicians on, both the treatment of the disease as well as demonstrating the clinical superiority of our medication.
And one last thing, can you give some highlights on growth in exports or the opportunity for us, what remains on exports, and what are the products or regions where we are exporting? Means some highlights of that would be helpful.
Yeah, so on the export side, I think we will leverage on we'll try to leverage on the low cost advantage for India. And the effort will be to try and as much get more volumes from the group to the Indian manufacturing side. So the effort will be to clearly leverage on the cost advantage that we have, and we'll continue to focus on that. In terms of the geographies which we cater to, so currently we are catering to Australia, we are also catering to a large part of Europe, Sri Lanka, and there is exposure also to the Russian market as well.
Okay. Thank you from my side.
Thank you. Thank you everyone for your comments and your questions. The company has issued a postal ballot notice dated 14 February for obtaining approval of members for material related party transactions with Sanofi Healthcare India Private Limited, a related party of the company. The details of voting and the results have been mentioned in the notice. We will also be sending out the annual report of the company for the year 2021, and we will be holding our annual general meeting on 26th of April 2022. I would now request Mr. Rajaram Narayanan to give his closing remarks. Thank you.
So thank you everyone for dialing in and asking very pertinent and insightful questions. As I said in the beginning, I think we have a very clearly defined strategy. Our focus is on growth in the areas which we have identified. We are very deep believers in the opportunity which is there in India, and more importantly, the fact that we can reach and impact far more number of patients than we've been able to do so far. And along with the support which we have from the group and the commitment which we have from our employees, we certainly expect that the years which are there, along with the initiatives of the government, we should be able to continue to make a big difference to the patients in India. So we will stay connected. Thank you for your suggestions. Keep sending them in to Radhika, our company secretary, and we'll connect with you soon at the next occasion.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Sanofi India Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.
Thanks for listening to this earnings call presented to you by Alpha Street. Now don't forget to subscribe and press the bell icon for notifications. Do also visit us at www.alphastreet.com/India.